Okay, well, welcome everybody. Thanks for joining. I know we have people on Facebook and some people watch on YouTube. And by the way, if you're on those platforms, please don't forget to like and subscribe. That kind of keeps us motivated. Before we get into it, our usual disclaimer: My Trading Solutions is not a broker dealer. We aren't recommending buying or trading of stocks, options, commodities, or anything else. Everything we do is for educational purposes only, so we can learn about these financial markets. And if you do decide at some point to trade with your own money, please do so understanding the risks and how those align with your own financial circumstances, your risk tolerances and investment objectives, etc. And if you continue listening, we assume you agree. Okay, we're going to move on. So today, well, first of all, do our usual look at the market, but I do want to take a little broader look at the market as well. And so as we go through this and we take a look at where we've been, we'll come back and talk a little bit about kind of just do a little bit of a 2022 wrap up is kind of, well, I guess the way I would characterize it. How did the market do? How did we do? I'll share with you how I did, because I hope that that's at least instructive and gives you some idea of what's possible in my personal portfolios, and then we'll look at how the Monarch did so far and all those kinds of things. So again, kind of a year-end wrap up, and this is the time of year when people do that stuff. So we're taking a fresh look at how 2022 ended with regard to our trading objectives, and then what do we how do we think about our fresh start in 2023? All right, so I am going to point out the super obvious. We talked about it last week. So what bar were we on last week? I'm trying to think if it was probably this bar was the one we were on last week when we had the call. It was one of these.
I think we were right under the line. I think it was.
We might. Well, and it also, we don't know what time of day of that we were on the bar. Could be on this one.
Oh yeah.
But the point of that is that we had talked about. In fact, I mentioned this 2 weeks ago. And you can go back and watch those videos if you want. And I don't know what happened to my little lines, but I said if we break out of this box, we're sort of trading in a range. And what would happen is if we broke out to the downside, we'd probably go down, come back up. This would become support or resistance, and then we would go down from there. And if we broke out to the upside, we would do something like this. And you can go back and watch the videos from before. I had these lines on there, and I don't know what happened to them, but this pattern, the reason I say this, and I mentioned this, it was for sure 2 weeks ago on the call, and it's on the recording. I'm not a great predictor. I don't know where the markets are going to go. I've just seen this over and over and over again. And this particular area, this area of support and resistance. In fact, let's extend our bar out a little bit. And let's bring it up to at least today, tomorrow. And this area, if you go back just in the recent past, just maybe the past 3 or 4 months, we have bounced off this area. You can see it. It's here. It's here. It's here. It's here. I just counted it before the call. We've bounced off this area 12 times. And here we are again. So it wasn't hard, because markets just don't go straight up. So it wasn't hard to predict that we would come up somewhere and, for a little while, we would have this rally we were going to punch through, and then we would have a retracement probably to this area that has been acting so consistently as resistance. And this is exactly what has happened. Now, are we going to stay here? I have no idea. But it would not surprise me if we didn't, bounce and rally a little bit here. I don't know where it's going to go. Some of these rallies are failed. Like, look at this. We bounce, we rally, We rally every time we bounce off it, we rally, but we never really got very far because the market just wasn't ready for those prices yet. But this area has been a consistent one of equilibrium. There's buyers and sellers tend to get in conflict right in this zone. So it wouldn't surprise me. So because of that, I'm thinking about that with regard to my deltas and I'm following right now. I'm just following the EWS signals. We're on green, so we've got normal configurations, and we'll be looking at our trades in a few minutes here. But if I were in one of those situations, maybe I'm putting on a new trade, maybe I'm making an adjustment where I had to choose between maybe a little negative or a little positive, because we've seen that come up a lot, especially with a 2-lot. You don't have a lot of granularity. So we sometimes do have to decide. I'd probably go maybe a tad positive right now because I think we're probably going to bounce off of this. Now, if I'm wrong, is it going to kill me? Not really, because I'm not going to go crazy positive. I'm just going to go, maybe slightly one way or the other. Sometimes we have to make those choices. And this is one of those areas where I would feel probably okay, going a tad bit positive, just because, again, we've seen this pattern over and over again. Like I said, just in this area alone, this zone here, if you go back, we have bounced off this area 12 times. Here it is again. Look what happens here. We punch through, we come back, stop right there, and then we rally. It's over and over again. We bounced off here, we bounced off here. So, not sure what's going to happen, but I feel sort of like one of those, better than average, that we're going to be okay. That combined with the fact we've got green signals on the EWS. And what does that tell us? Tells us in order for this, we're monitoring two things. And really it's really one thing, and that is what's happening in the institutional investing world. Is there heavy selling? And so people are shorting positions. There's heavy volume selling that can only come from institutional investors. That would cause us to turn yellow or red. And is there heavy buying of short-term puts where people are protecting their downside? If those things are happening, we're going to see yellows and reds on EWS. Well, we're not seeing either one of those. So that tells me we don't have a bunch of panic going on in the institutional investor world. Everybody feels like, hey, probably a normal pullback. Excuse me. We had a big rally. We came from down here, 3,800, give or take, to, over 4,000. We had a 220 point rally almost straight up. Of course, we're going to have a little pullback. And so I think most of the institutional world is, they're not panicking yet. They're thinking this is normal. Again, nobody knows what's going to happen. Certainly, I don't know what's going to happen. But when I see these patterns over and over again, it kind of makes me feel a little more comfortable that maybe this is a normal pullback. So that's what I'm seeing. I'm going to continue to watch this. Of course, I will always line the trades with the EWS signals. They really do a great job of telling us when things are normal, when things are not normal. So right now things look pretty normal. Okay, so let's move back over here. And I guess before we do that, let me back out here and let's take a minute to look at the big picture. By the way, I mentioned also, I know I'd mentioned it last week, and I think I mentioned it 2 weeks ago as well, that on this rally, a logical place for us to pause would be this same area of the 200-day moving average and this downward trend line. We did it here, we did it here. This is where we pause, this is where we pause, and it wouldn't surprise me to see that again. And of course, that is kind of what happened here, and then back down to our area of resistance. And I bring that up because that trend line is, again, part of the big picture. It's part of the and it's really, let me Let me extend this a little bit. You could really take it all the way up to the top there, give or take. And I don't ever try to hit I know some people want to be real precise with these. I get as close as I can, but the reality is the market doesn't work that way. These things kind of hit in, broad ranges when they hit. So this is close enough, this is close enough, and this is close enough for me to think that, that area was an area of resistance for people. But what I'm really interested in bringing out is this high was exactly the beginning of the year. This high right here was on 1/4. What was that, the third trading day of the year, and we've come down. The market bottomed out much lower in October, but we ended the year down just about 20%. I think it was 19.4%, and from the high. And that is, boy, I believe that. In fact, I've got a slide here I'll show you in a minute. I think that's the fourth worst year we've had in 50 years. It wasn't, maybe more than that, maybe 75 years. The 1929 and 30 depression was a little more than that. Well, it was a lot more than that. But outside of that, I think it was until the 70s where we had a pullback that big. Certainly in the 73, 74 bear market, and then it's the 2001 .com crash and 2008 financial crash. But that's a big. To end the year down 20% is big. I guess that's my point. In 100 years, it's probably happened 5 times or 6 times. So it's not normal, and definitely interesting to observe. So let me go back over here and take a look at what I wanted to. Yeah, so here we go. So in the last, call it 50, 70 years, there's only been 3 markets that have dropped this much. And what I think is interesting is what happens the year after. And how do we think of this? And of course, we don't know. And there have been cases, and 29 and 30 was an example of this, where there were back-to-back really bad years. But it's pretty rare. And what normally happens is, of course, the markets always revert to average. So when there's a really bad year, it's frequently followed by a really good year. And so you can see these are the only 20% plus bear markets since, really mid-century. And in each case, there were monster years after that. So is that going to happen in 2023? I don't know, but I think that right now that the SPX prices are pretty good. So I think that there's a lot of investors that are going to start trickling money into the markets and trying to capitalize on the fact that prices are very low right now. So just something to keep in the back of your mind. And I'm going to talk about today a little bit how I use this information.